Hey everyone, welcome back to another recap video. So this is going to be my October recap for 2021. This month I took 24 trades and made 3.67%. My mentor has taken, on the same pairs as me, he's taken 16 trades and made 3.25%. So this month, I definitely feel like I overtraded a bit at the beginning, and this was because I hadn't yet built myself a trade plan yet. So towards the middle of the month, I built a trade plan, and I've been taking much more refined setups, higher quality setups, and honestly, it's just been going much better since I've had my trade plan. So although I have all these trades I regret, my girlfriend always says you either win or you learn, and I've definitely learned a lot this month, and I'm going to be winning more in November hopefully. I've also started the FTMO challenge. It's currently the 28th of October, it's a Thursday. I started the challenge on Tuesday, so I'll keep you updated with that. Next update you'll get will probably be in my November recap. If this video is useful to you, make sure you subscribe. If you want to learn more about the strategy I use, the link's in the description. Without further ado, we'll get into the charts. So we'll start off here on Aussie Yen. I don't have enough time to show you all of my trades because I don't want this to be a 40-minute video. So I've hidden a few of them just to save myself some time. So we'll go back to the beginning of October here. So first of all, we have this reversal trade which I took, and in my mind, we broke the high quite clearly, whereas in reality we hadn't really broken this high yet, which that's the high which really needs to be broken. So although this was a nice trade and we did earn some profit, I would have preferred to see a bit more momentum if I were to take this again. And you can see it tapped me in with quite an aggressive retrace. So initially I was a bit worried. I don't like being tapped in by aggressive retraces, but immediately price went up, formed this ascending structure, and took me out for 3.16% profit. So that was quite good. I think all of my trades in Aussie Yen this month ended up being profitable. So we had clear momentum from here. You see we came down, back up, we had this ascending type structure, and then we broke to the upside with 2 impulsive candles, which is my criteria for entering a flag. I need at least 2 impulsive candles to enter a flag. So we then formed this flag, we came down, up, down, and then we had this strong retrace candle. However, this was during spread hours, so I waited until the following hour. Unfortunately, we didn't break the high, so I could enter on this candle, and we moved up and came back down. We moved up, which allowed me to reduce my risk. Oh, no, not quite. Didn't quite allow me to reduce my risk yet, because that's below where my stop loss was already. So as we broke the high, I was able to reduce my risk, and then price kept moving up, came down, counter trend, broke the high again, allowing me to further reduce my risk, taking me out for a 1.71% profit here. We did actually have a lot of momentum in the end, so it's almost a shame that this trade took me out, but I don't need to worry about how much profit I could have made because there's plenty of opportunities for me in the market. So you can see Aussie Yen had, all of the yen pairs, Euro Yen as well, had big moves up this month. And unfortunately, with my strategy, there wasn't much opportunity for me to capitalize on it. There were a few chances which I missed, but they were late at night, so I wouldn't have been able to take them. So we did find this flag later on. I entered on, again, just after spread hours, because this is the entry candle. I entered on the 11 o'clock candle, and price immediately moved up. Actually, you can see that I took this at 11:05, I think, so straight after spread hours. That's why it's at the very open of this 11 o'clock candle. So you can see we moved up, and again we broke the high, we pulled back and it moved up again, which allowed me to reduce my risk 2 pips below this inside bar, taking me out for a 1.42% profit as price retraced. So again, that's really nice profit, and here we are now, we're within this big range. So on Aussie dollar, I took a couple more trades. On Aussie dollar, I had a few more losses. Same with Euro dollar. They were pretty messy this month for me. So I'll show you some of the trades here. So you can see we had this larger overall ascending structure, a lot of momentum down. We had this small pullback, and price continued down with this really strong candle with a really nice close. So I set my entry 2 pips below this low. You can see right here, this low. And price came up quite aggressively to tag me in, and we also had these 3 wicks. So from what I've learned now, because this was at the beginning of the month where I was just taking every valid setup, not really considering price action quite as much, I've definitely learned to consider price action a lot more in my trading this month. So after having double wicks here, I would not have entered this trade. Having an aggressive retrace is the second reason I wouldn't have entered this trade. So unfortunately I took a 1% loss there, but that's fine. Similar situation here, we had a really strong impulse up, small wick, strong close, but the next candle had a big wick on, which is a warning sign, because quite often after we get a wick, we either get a reversal or a range. In this case, it tagged me in with quite an aggressive retrace again, broke the high, allowing me to reduce my risk below this low, and then I was taken out with this long wick for a reduced risk. Let me see how much that is for you guys, how much profit. 9.6 divided by 12 pips, 0.8. So I made about a 0.8% loss on this trade. Is that locked? Yeah, that's locked. Okay, so a 0.8% loss and a 1% loss so far on Aussie dollar. This next trade, we had another strong impulse up. This is a trade I don't regret taking, really. We moved up with a lot of momentum. The second candle was a bit smaller, but then what I didn't consider was that I shouldn't have really set my entry. Oh no, it was valid. So I try to avoid setting entries when price is more than 20 to 30 pips away from my order. On the Aussie pairs, so Aussie yen and Aussie dollar, I tend to avoid taking entries when price is more than 20 pips. So 20 pips away on the Aussie pairs and 30 pips on euro yen, euro dollar, and pound dollar. So in this case, it was just barely within my trading criteria, because you can see it was about 20 pips, which I'm okay being tagged in by. But again, unfortunately, price did come back with one large candle to tag me in and continue down. So I was hoping for more of a descending structure down. So when you're setting your order, you've really got to be prepared to be tagged in by one candle, and I didn't have that in mind. So this trade taught me to be more aware of when I'm setting my order, because I wouldn't have wanted to be tagged in by one candle there. So here's a profitable trade I took on Aussie dollar this month. So we had this clear descending structure. Sorry, perhaps I should use the pen tool. So just descending structure here. We came up, formed the flag, and then I entered on this candle here. So you can see again, spread hours. This seems to be a reoccurring pattern with the Aussie pairs. So you can see I set my entry immediately after spread hours on the open of this candle, and you can see the following candle had this strong retrace, and I think a few members got in on this. I know my mentor Joshua did. He got in on this candle because this wasn't enough for him. And you can see price moved up quite nicely, making 5.22%. And then there was also another flag here. You can see broke the low. We had nice double wick and a strong retrace candle for the entry, although it was quite close to the high of the flag, which is a deterrent for some people, but I was okay with this, just considering the double wicks and the large retrace candle. And you can see price came up, counter trend, broke the high, allowing me to reduce my risk to 0.2%, and then it tagged me out before then continuing to the upside. So 0.2% profit on there and 5.22% profit on there. So that's 5.42% profit overall on this trade, and then minus 2.8% over here. Okay, we'll do euro yen next. I'm just gonna have a drink of water. There we go. Okay, we'll go back to the beginning of the month. It makes my throat really dry talking this much. Okay, so we had I think this trade, what happened with this trade? Okay, I understand. So this trade was also a loss because I had reduced my risk. So we had this flag, we had a lot of momentum to the upside, albeit they were all quite small impulsive candles, but this last candle was enough for me to be interested per se. And quite often with euro pairs, we get the pen tool, we see ascending structures and then price moving to the upside, whereas quite often we see descending and then to the upside, whereas with euro pairs, it's not often surprising to see this type of pattern, a little descending at the bottom and then back up. So you can see we had this ascending, strong break up, so this was quite high probability for me, especially with the smaller flag, and then price immediately And did we even break the low? I think we literally broke the low by a pip. By 2 pips. I'm looking up here, by the way, at the low. So 170 and 168. So we broke the low with 2 pips, I think. Or 0.2 pips. So I set my entry, price moved up, breaking the high, allowing me to reduce my risk. So on this trade, I would have made about, that was 0.5, so 5 shared by 12, about negative 0.4, so negative 0.4% on this trade, although it's annoying because look how much it moved up afterwards, just after tapping me out, but that's part of the plan. That's what I mean by this month. There were a lot of like fake outs with the plan that I use, where it would just take me out and then go. And you can see I missed out on a lot of profit here, but again, that's just the way it goes. That's no problem. It can't be, that's fear of missing out. You want to avoid that. So next trade here, we had this clear momentum to the downside after breaking this overall ascending structure. We came down and had another ascending structure. Came down, we had a flag here, which well, actually, it was invalidated after the retrace candle broke the low, so I'll ignore that. So clear momentum to the downside, big wick, more momentum to the downside, and then a solid close. Solid close, usually a very good sign that price wants to continue to the downside. In this case, price retraced quite aggressively, taking me out for a 1% loss. So that's euro yen. We'll go on to euro dollar now. Okay, so I'll go back to the beginning of the month, October. Here we are. Okay. Bear in mind, the trades I took at the beginning of the month, I'm not very proud of them. I've learned a lot from this month. So, another overall descending structure. I was mainly looking at this rather than the larger descending, but all of these wicks, and these double wicks especially, is what really piqued my interest. So we broke the high, but you can see about 50% of what we broke above the high is all wick. So now I'd wait for a second impulsive candle before I even considered an entry like this, but then I didn't. I would have just, any break was good enough for me. I would have probably only been deterred if the wick was like twice as large, but now I'm quite happy with avoiding a trade like this. So you can see we had a double wick, and then price continued to the downside very aggressively, taking me out for a full loss there. So this trade was a weird one. It's actually invalid, this trade. Despite it making me 5%, it was actually an invalid trade. So my data showed that this was an inside bar, so counter trend, but you can see the lows. If you look at the top left of my screen again, you can see the lows are both the same, 779. So if this was 780, which it was at the time, it was showing as an inside bar for me, this would have been a valid trade. So it's about 0.1 pips away from being valid. It doesn't work. It worked out, so it doesn't bother me. But yeah, you can see we had a really strong break of what I thought was an inside bar, and then I was tagged that back in by quite an aggressive retrace at 9 o'clock. So you can see classic EURUSD, a lot of volatility around the London market open. So 8 o'clock London market open, and then I was tagged in at 9 o'clock. So you can see then price moved to the upside. I was then able to reduce my risk immediately to here. Price continued moving up, counter trend, broke the high again, reduced my risk further. I know some members got in here as a continuation, but I avoided it after we saw this aggressive retrace, because my entry would have been right here. So after I saw this aggressive retrace, I cancelled my order. But in hindsight, all these little candles show that price doesn't want to continue to the downside, so I may have considered re-entering around this area, but I didn't. Like, this time's gone by now. This is a week ago, but so now I can see that momentum clearly hadn't shifted despite this aggressive retrace. So yeah, I would have been happy to take this now. So price continues the upside. As a scaling, I would have been happy to take this as a scaling. So price continues to the upside, broke the high again, allowing me to reduce my risk, broke the high again, reduced my risk. So this was where we got 4.93 profit. And then we had this break here. So we broke this high with 2 impulsive candles. We got a bit of a wick, I'm quite happy being fairly aggressive with my scale-ins, continuation scale-ins, so I took this trade without any hesitation, and price took me out for 1% loss. So I never really hesitate with scale-ins. I'm quite happy to be fairly aggressive with them. This isn't a continuation I take normally, but considering I had 5% to fall back on, I was quite happy having 4% with the potential of doubling my profit every pip if price did choose to continue moving to the upside. Oh, we got a lot of momentum in the markets. Let me just see if there's any trades. Alright, I've got my eye on Euro US dollar. You're getting a forecast now as well. If price comes back down slowly, I'll be interested to take that because of the overall descending structure. Pound dollar, Euro yen, same thing with Euro yen. Now we've broken the low. I wouldn't be surprised if we came back down like this. I would be interested to take it. But again, this is one of the things I've learned where price is over 30 pips away. I don't want to be tagged in by one candle, so I wouldn't be setting my entry yet. But yes, I have my eye on those for the next few hours now. That's good. Good for my FTMO because I need some action. Okay, let's get back on track. So last pair now, pound dollar. I took a few trades on this pair this month. So you can see we had this move here. So with pound dollar, it's a very volatile pair, so and a very range bound pair as well. So you need to wait for momentum before you even consider an entry. So you need to look for big moves like this. Something, let's see. Oh, sorry, something in my eye. Something smaller like this, not interested. You see how it moves, really big choppy movement. That's what you're after. So you can see here we got a big wick which suggested that a larger range to come. So I waited, and then after we broke this low, I set my order. That was at 3 AM, so I didn't take this at the 3 AM candle, but when I woke up at 7, I was able to set my order then, and price chose to move to the upside. And as we broke the high, I was able to reduce my risk, giving me a 0.38% profit. So as price retraced, we had this head and shoulders type formation. I was taken out by these wicks. I could have locked in a bit more profit actually, but yeah, it's generally quite a wicky pair. You can see a lot of wicks at the tops and the bottoms. So you can see as price came down, we had a double wick, which and an aggressive retrace, which told me that I can expect a wider range before price chose to move to the upside or downside. So I waited for the price to break the high, which it did right here, except that was spread hours. So I waited and waited, and price continued moving up, and I got in at the combo level. So I had my entry here, came up, tapped me in here, and immediately retraced. However, price then continues to the upside, taking me out for a 1% loss there. So 2 more trades on pound dollar now. Here they are. Something in my eye. Excuse me. Okay, so more clear momentum to the upside. Triple wick came down. Sorry if I'm going too quick. You can see we broke this low here, and as we broke it, it's very important to note how we break the highs and lows. So we broke this low and we immediately retraced. Broke the low, immediately retraced. So after we had this, you can't really see it, this solid retrace candle, I was interested to get involved, and price did initially move up, and then momentum carried on to the downside, and then we moved up. But you can see price really struggled to break this level a few times. I'm not sure if that's like an overall resistance level. Doesn't look like there's, sorry, you can't, going on a tangent, you can't really see, doesn't look like there's any big resistance, but you can see later on there was another flag after I got taken out of here. It's important to note that if you've taken a loss before, you can't hesitate to take trades again that fit your plan just because you're afraid of getting another loss. So despite having just lost here, I didn't hesitate taking the next flag which followed suit. As we just barely broke this low, in hindsight now, I probably would have waited for a bit more of a break and then a flag. Quite often with this pair we get something like this. We get a range around here. Sorry, I'm not very good at drawing with the pen tool. I need a touch screen so I can draw on my monitor for you. Okay, so this retrace candle is really what sold it for me, because we had these double wicks at the bottom. Let me go back so you can see what I was looking at. So you can see here, this is a very clean flag, a lot of momentum to the upside. As we broke the low, it was every time we broke the low, it was with a big wick. As we broke this low, we wicked, retraced, broke the low again, wicked, retraced, and as we retraced, we got a solid close, so that really sold it for me. And pardon me, and then price came back down, continued wicking, lots of wicks on the bottom, and took me out for a 1% loss there as well. So yeah, that's how it went. I haven't shown you all of my trades because there were a few at the start of the month which are just dumb, and I don't want to make a 40-minute video about all the trades that I've taken this month. Hang on, I'll switch back to my face. So that's all my trades more or less. So that's 3.67% with 24 trades. So a bit of a slower month. Although we did have some big moves, there wasn't much space for me to capitalize on. I was close to being on some big moves, but then price would like tap me out and then go. So obviously like being stop hunted a little bit there. But yeah, there you go. Thanks for watching the video. I hope it was useful to you. I'll see you in November. I'll see if I might make a video in November, which isn't a recap. But yeah, it's the recaps that I really enjoy making because I feel like they'll provide the most value to you guys. Just going through, if you're only backtesting and you're in guerrilla trading, then hopefully you can seeing some actual live trades that I've taken during the month will be useful for you. And I'm not just showing you my winners either. I'm showing you the loss. Like the trades that I've shown you have been losses that I've learned something from. So I'm not just showing you any trades. I'm showing you my most significant trades, really, the trades that I've won or learned from. So yeah, I hope it was useful to you. Have a great November. Enjoy Fireworks Day and Halloween and everything. Yeah, all the best. Thank you.